Well, you're right, Cheb, in your Facebook, because not only did that issue come back on the day, most of the stock on the planet seemed to come back for a day. Making up, that is for the Dow, about half the ground lost last week. And what if I told you those tariffs were the reason? That's right, those tariffs are a big part of the reason. Welcome, everybody. You're watching Your World. And what in the world to make of what happened at the corner of Wall and Broad today? The same tariffs that frightened the market and that this president was crazy to even think of going after China. Well, I think the Chinese might have blinked. Reports now that they're pondering some solution to avoid an all-out trade war with the United States. Now, the rumors were that the Chinese were entertaining buying a lot of semiconductors, in other words, computer chips. Now, whether that would be enough to alleviate the trade gap between our two countries, which has become a huge chasm, is anyone's guess. But if it is true, and the Chinese are looking at alternative moves that they can make to avoid an outright trade war, it could be an enormous victory for the president and an enormous victory for the financial community. Now, keep in mind, after last week's drubbing, one of the worst we've seen on a weekly basis in a couple of years, stocks were coming back across the board. Even Facebook. Now, it was down at its worst today, more than 5%. It essentially paired all of those losses. That doesn't mean it is out of the woods. What it means, though, is that by day's end, it was just up enough to avert what had been about $100 billion hit in market value. And I know you're very concerned for Mark Zuckerberg and whether he can come out of this with his finances in order. He had been down about $10 billion. By day's end, more like $9.8 billion. I should stress, if you're worried about his financial viability, he's still worth about $65 billion, which is the rough net worth of my next guest, Charles Payne, the host of Making Money on Fox Business Network, and his read on what the heck happened today. Man, oh man, the same tariffs worked to the market's advantage. And I might credit you, my man, because you were saying that this could work to the president's advantage. This could work to the trade community's advantage if you force the Chinese to do something. It's still early.
It's still early,
but it looks like that could be happening.
You're right, Neil. And you know what? And I really hope the headlines don't read that the market was up because we averted a trade war. No, it's because we won a trade war skirmish that we finally stood up for ourselves once. And you know what? It is a dicey, delicate global economy that's doing extraordinarily well, and nobody wants to risk it. And the idea that somehow China would beat us, I was shocked that everyone from Republican senators over the weekend running up the white flag to experts on Wall Street. But the fact of the matter is China is ripping us off big time, and they know it. We know it. So for them to make some concessions, now you mentioned that the semiconductors, those stocks did very well. But one of the keys I think they're going to do is to not force these joint ventures on U.S. companies that want to do business there, and not just outright steal the technology to the degree that they have been. It's been brazen, it's been belligerent, and it's to the tune of $600 billion a year. So, maybe this is one where we stood our ground and we might end up winning. And guess what? When we win, look at the market. Everyone wins.
It's still too early to tell. To your point, one of the things that you reminded me, and have been saying, and on your show and elsewhere, is that no one dismisses the fact that the Chinese cheat, that they rig their markets, that it's very, very difficult to get any business going in that neck of the woods, or that, a lot of U.S. companies that make inroads there do so because they give away the candy store so that they can. But there was something more interesting about it. Past approaches to this have involved presidents, Democrat, Republican alike, hoping with kind talk and a little bit of begging, the Chinese would operate differently. They never did, never have. The trade deficit grew bigger. Right. The president threw a sort of a lightning bolt into this and said, well, this is what I'm going to try. Now, we're a long way from getting any concessions, but the talk is the Chinese don't want a trade war, right?
They don't want a trade war. You have a guy who just crowned himself emperor, and while everyone talks about how much of our debt they own, they're not the largest owner of our debt. In fact, they're like the number 5th or 6th largest owner. They themselves have debt that equals 250% of GDP. But let's just talk real quick. A good example of all of this would be General Motors. They sell more cars in China than they do in America now. Consequently, what they've had to do is they have to build factories over there, and they have to share information. Last year, one of the hottest SUVs was the Buick Envision. They export those from China into America. Think about this for a moment, Neil, that China made General Motors build factories over there. Consequently, now they're exporting cars from there to here. It helps General Motors stock. It helps the Chinese workers that make the car, and it might even help the American consumer. But there's one person left out of this, and that's the American auto worker who might have had that job. What do? We lure businesses. Look how much we're giving Foxconn to come to Wisconsin. Literally hundreds of millions of dollars. They make us do things. We lure them with billions of dollars. There's something wrong with that equation.
All right, Charles Payne, thank you very much, my friend. Charles Payne.